in Australia, buying a general index, you buy equal weights of the index. You've created something. When you buy the Australian index, you buy depending on how large the company is, and you buy that percentage portion. VanEck takes a different approach to buying the Australian index. Could you explain that a little bit?
Yeah, absolutely. So obviously we pre-prepared, but it's particularly important. Oh, look at this slide I prepared earlier. Look, it is particularly something to know, and it's very particular to the Australian market. So we all read about on the news, the ASX, S&P ASX 200 is up 2%, down 2%, right? And what exactly is that? Well, the ASX 200 is weighted based on the size of the company. So the bigger the company, the bigger the weight in it. So the top 5 shares in the ASX 200 make up nearly 29% of the index. And then the top 10 make up 42.84%, right? So when you're buying anything to do or looking at the ASX 200, you're really only buying the top 20 shares. They're making up a massive percentage of the ASX 200. So the other 180 shares are really just an irrelevant little piece to the ASX 200. They're not having any major impact. And what it does is it overweights things like banks, because the big 4 banks, and they're making up a big percentage of the ASX 200, making up probably 20%, right?
So Jamie, just to get this right, if I'm putting $1,000 into the ASX 200, basically $428 of that is going to 10 stocks, correct, 10 companies. Yes. And then 100%. The rest of that $58 is getting a portion between the other however many 190 stocks.
That is exactly right, yes.